Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, October 17th, 2024. So we saw a little bit of everything today. The initial move was a gap lower, and we really saw things kind of start to accelerate to the downside. And we, just looking at the indicators that I follow, it was, take any bounces that we see and look to short. And, I was doing that by writing some call premium. I got out a little bit early on one, but in any case, then we made like $1,000, I think. Nothing crazy at all. 1,045. I could have gotten into some other ones, but the problem was that it was just getting a little too late in the day, so I didn't really want to be making any moves like that. So I want to bring you through some of the say fundamental or breadth charts that I look at, and this is more for, let's just say, a little bit of a longer duration, meaning that we can head up into 2025. Its seasonality is definitely on the side of the bulls on this. I'm just seeing a real lot of caution flags out there, and typically, they can get ignored until they don't, and when they don't, we usually see a pretty big, hefty pullback in a fast way. So the problem that most people have is that they sit there and the market's on its way up, it's not coming down, they give up protection. Once they give it up, then from there we see the put call ratio shoot up in this decline. Well, we're kind of in this same thing. We're in an area right now where you want to be a little more defensive on the long side, and if anything, take half profits, let some run with the stop, or write some covered calls off of it. But it's whenever we're in this type of situation where they throw away any kind of protection, yes, the rally could last, but what happens is it pretty much always ends up the same, where we get a pretty nasty drop. Everybody that was all bullish becomes bearish, and it's just a cycle that moves around. So let me bring you to the next chart. Okay, this is just a percentage of stocks above the 50-day moving average. So here you can see this thing is collapsing right here, and what it's basically telling us is that this lift from from here we got a little bit of participation, we got a little bit, but then it started dropping down, and this is where you have the 7 big tech stocks that take over and keep the market afloat, and that could work. This isn't any real immediate bearish thing, but the way that I look at it is, if you have 7 stocks or 8 stocks that are really carrying the entire indexes, they're going to run out of steam, and say that steam is valuation, and people are going to unload them. And unless the rest of the market starts, the stocks start picking up, if they do, then we kind of just see a sideways action. But if they start going down with say the Fab 7, we're going to see a pretty big nosedive in the indexes. So let's take a look at the next. Okay, this is one of my favorite longer term indicators that I follow. And again, really what we're looking for is a divergence in the breadth compared to where the market is. And here you can clearly see we made the top right here, and from there we started going down as we made a higher high. So there is a NIAID sell signal in place. Again, it could fix itself. We've seen these before, but if it doesn't, typically we've seen anywhere from a 10 to 20% pullback from it. And that's one of the reasons why, like I said, I'm not trying to scare you guys out of positions or anything. I'm just saying there's a lot of these breadth indicators and momentum indicators that I follow are they're throwing out some pretty major red flags, and we just need to pay attention to it. So let's just go to my last chart. Okay, and this is the VIX chart, and again, what it's really saying is that everybody gets extremely bullish when we have the VIX down at levels where you should start being a little bit more on the conservative end. Now here we had the VIX down; it actually went all the way into the into the July, August timeframe and then shot up. And that's when we saw the big move. So when it's coiled down here, you have to expect that we're going to get some kind of big move that's going to bring the VIX back up into the 22. If it really starts to break out to the upside, then we start looking at the 37. But currently, it's trading at 1587. So there's a lot of room to go. And when this moves up, it means that usually traders are nervous or they're buying protection, but that's usually after when it's too late. So in the report today, I had showed that we had a possible triangle right here, and I said, if it breaks to the top, then it's a bullish triangle. If it breaks to the bottom, it's a bearish. And really, the best way to do it is just wait for the break. But this is starting to not look like the proper pattern that I'm watching right now. And the reason why is you can see if it would have stopped here and then went up or taken this out and taken it down, it would have made sense. But the fact that we took out these lows, found support at these lows, and then shot up. I know that a majority of the big move towards the end of the day was because we have the Fed meeting tomorrow. So it could really mean absolutely nothing. Or if this isn't the pattern, this triangle here, I'm just going to delete this. Then what happens is the way that I would look at this pattern would be a descending triangle, and it would really just be from here. So this is A, B, C, D, E, and then this would be the final touch, and we head down. But that's if we get up there. I mean, it could have, we really could be where we're just going to do some type of retraction and then head down. But if we're going to head up, then there's a chance we're coming back up to the 60-80 area, which is only about 30 points above. But the fractal pattern that I'm looking at is here. You can see we had the low, popped up, and then made another low before going up. So here we have a low. Well, actually, it's a little bit different on it because we have a low up and then down. But this is really what I'm looking at, where we took the lows out and it found it at the same one. So I would be, we do have buy signals that we had on the 5-minute chart. You can see here with momentum, where we're making a higher low as price was making a lower low. So on the 15-minute chart, really what I want to show you that got me a little bit surprised that we made this bounce here was we were through the 62, 70, basically all the fib numbers, and once it typically goes by to 78%, you see price become a magnet down to a full retracement. And the fact that it stopped right above and then shot up that caught me a little bit by surprise. But the triangle that I was showing you, 59.60 would be the downside target. If it pops up, then we're looking at right around that 61.33. So again, you can see we had some bullish divergences here. They were very small and very quick, but it produced this. Now we just need to see if the bulls can get through this congestion right here, I would say let's just leave it there. Right around, I'm going to remove the fib numbers because they're out of play now. If they can get above the 60.58, then we have the gap right here at 60.67. But most likely we're going to come up and possibly test the bottom of this. I'm at the top of this triangle here, which would be around that 60.80. So that's really the way that I would look at this, is if they get above the let's say this resistance right here, that the next move is going to come right around somewhere up into this area here. And if it holds it down, then all we're doing is just setting a range, and you could trade those ranges. So again, we had the buy signal, so this did not really surprise me. If the bears can get through these lows, they obviously have these lows to deal with right here at the 60.30. Better support is down at the 60.20. Looking at the 60-minute chart and my last chart of the night, we really didn't have any buy or sell signals on it. Again, this was that triangle that I was looking at. A proper retracement I would anticipate would be coming somewhere down into the 6,000 level. and possibly even doing a 50 or a 62% retracement of the entire move here. It would just be kind of healthy for the markets. But, we have these sell signals that are there. We already know that a lot of the internals are throwing up red flags. And right now it's really the seasonality that's keeping everybody pretty bullish. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.